Welcome back to Boni's Life, where we decode the crypto markets with the precision of a Swiss watchmaker and the enthusiasm of a kid in a candy store. I'm Boni, and if you're wondering whether this week's crypto action was more dramatic than a soap opera finale, well, you're absolutely right. We've got Bitcoin touching $124,000 before pulling back, Ethereum stealing the institutional spotlight, and the Federal Reserve making moves that would make even the most seasoned crypto veterans do a double take. Today, we're diving deep into what I'm calling the Great Crypto Pivot of August 2025. We'll dissect the technical patterns that are screaming louder than a fire alarm, analyze the fundamental shifts that are reshaping the entire landscape, and most importantly, I'll share the trading strategies that could help you navigate the choppy waters ahead. Whether you're a diamond-handed hodler or a nimble day trader, this episode is packed with insights that could make the difference between profit and pain. Let's start with the elephant in the room, or should I say, the Bitcoin in the room. This past week has been nothing short of extraordinary. Bitcoin reached a new all-time high of $124,400, a moment that had crypto Twitter celebrating like it was New Year's Eve. But here's where it gets interesting, and this is where technical analysis becomes your best friend. The price action that followed tells a story that's more nuanced than the headlines suggest. Looking at the weekly time frame, Bitcoin's journey to 124,400 wasn't just a random spike. It was a methodical climb that respected key technical levels along the way. The breakout above $120,000 came with substantial volume, indicating genuine institutional interest rather than retail FOMO. However, and this is crucial for your trading decisions, the rejection at $124,400 created what we call a shooting star candlestick pattern on the daily chart. For those new to technical analysis, this pattern often signals a potential short-term reversal, especially when it occurs at significant resistance levels. The subsequent pullback to $117,000 wasn't a cause for panic, but rather a healthy retest of the previous resistance-turned-support zone. What's fascinating is how the market respected this level almost to the dollar. This tells us that institutional algorithms and professional traders are watching these same levels, creating a self-fulfilling prophecy that makes technical analysis so powerful in crypto markets. Now, here's where the story gets even more intriguing. While Bitcoin was making headlines with its new high, Ethereum was quietly orchestrating what might be the most significant shift in crypto market dynamics we've seen this year. The ETH-BTC ratio, which measures Ethereum's performance relative to Bitcoin, has surged by 33% in recent weeks. This isn't just a number on a chart. It's a seismic shift that signals the beginning of what many analysts are calling altcoin season. Ethereum's technical picture is painting a masterpiece of bullish momentum. The break above $4,000 wasn't just a psychological victory. It was a technical breakout from a multi-year resistance level that had been capping Ethereum's upside since its previous all-time high. The RSI on the daily chart is showing healthy bullish momentum without being overbought, while the MACD is displaying the kind of bullish crossover that makes technical analysts salivate. But here's what's really got my attention, and this is where fundamental analysis meets technical analysis in beautiful harmony. The institutional money flow into Ethereum ETFs has been nothing short of spectacular. We're talking about $1.54 billion flowing into ETH ETFs over just 2 days. To put this in perspective, that's more money than some small country's entire GDP flowing into a single asset class in 48 hours. This institutional adoption isn't happening in a vacuum. It's being driven by fundamental changes that are reshaping the entire crypto landscape. The Federal Reserve's decision to scrap its novel activities supervision program is perhaps the most significant regulatory development we've seen since the approval of Bitcoin ETFs. This program, which was specifically designed to police banks' crypto activities, has been officially terminated. Let me be clear about what this means. The regulatory chokehold that has been constraining institutional crypto adoption for years is being loosened. Senator Cynthia Lummis didn't mince words when she applauded this move, calling it a victory for financial innovation. But beyond the political rhetoric, this regulatory shift creates a clear pathway for traditional banks to engage with crypto assets without the fear of regulatory backlash. We're already seeing the effects, with major Wall Street institutions like Wells Fargo leveraging ETFs to gain Bitcoin exposure. Now let's talk about the expert opinions that are shaping market sentiment, because in crypto, perception often becomes reality faster than you can say blockchain. Peter Brandt, a veteran trader whose track record spans decades, has thrown a curveball into the bullish narrative. He's giving Bitcoin a 30% chance of having already topped in this cycle. Now, before you panic sell your portfolio, remember that Brandt is known for his contrarian views, and his bearish stance often marks market bottoms rather than tops. On the flip side, Stephen McClurg, CEO of Canary Capital, is painting a dramatically different picture. His prediction of Bitcoin reaching $150,000 before the end of 2025 isn't just wishful thinking. It's based on institutional adoption metrics and macroeconomic factors that are aligning in crypto's favor. McClurg's analysis focuses on the retirement account inclusion trend, which is creating a steady stream of institutional demand that wasn't present in previous cycles. But perhaps the most intriguing prediction comes from Tom Lee at Fundstrat, who's targeting $12,000 for Ethereum by December 2025. Lee's analysis isn't based on hopium. It's grounded in network growth metrics, institutional adoption rates, and the expanding Ethereum ecosystem. His target implies a market cap of $1.8 trillion for Ethereum, which would represent a fundamental shift in how the market values different crypto assets. JP Morgan's endorsement of Ethereum adds institutional credibility to these bullish predictions. The banking giant sees Ethereum delivering gains of more than 200% after its recent price channel breakout. When traditional financial institutions start making such bold predictions about crypto assets, it signals a level of mainstream acceptance that was unthinkable just a few years ago. The macroeconomic backdrop is providing additional fuel for crypto's fire. The Federal Reserve's expected rate cut in September is creating a risk-on environment that historically benefits crypto assets. Lower interest rates make yield-bearing assets less attractive, pushing investors toward alternative assets like Bitcoin and Ethereum. The recent inflation data that gave the Fed the green light for rate cuts is the same data that's driving institutional money into crypto. But here's where it gets really interesting from a trading perspective. The market structure is showing signs of a fundamental shift. Bitcoin's dominance has declined from 65% in May to approximately 59% in August. This might seem like a small change, but in crypto markets, such shifts often signal the beginning of altcoin seasons that can last for months and generate life-changing returns for those positioned correctly. The ETF market is providing real-time evidence of this shift. Bitcoin and Ethereum ETFs just recorded their biggest week ever, with $40 billion in combined trading volume. BlackRock's Bitcoin and Ethereum ETFs alone bought over $1 billion during Thursday's 5% price correction, demonstrating that institutions are actively buying the dip rather than panic selling. Now let's get practical. What does all this mean for your trading strategy over the next week? First, let's identify the key technical levels that will determine short-term price direction. For Bitcoin, the $100,000 to $17,000 level has proven to be crucial support. A break below this level could trigger a deeper correction toward $112,000, where the 50-day moving average currently sits. However, a bounce from current levels could target a retest of the $124,400 high, with a potential breakout toward $130,000. For Ethereum, the $4,500 level is acting as strong support backed by both technical indicators and institutional buying interest. The next major resistance sits at $5,200, which represents the 78% 0.6% Fibonacci retracement of the previous bear market decline. A break above this level could trigger a rapid move toward Tom Lee's $12,000 target. Here's my trading strategy for the next 24 to 48 hours. And remember, this is not financial advice, but rather an educational framework for thinking about market opportunities. For Bitcoin, I'm watching for a potential long entry on any dip toward the 115,000 to 117,000 zone, with a stop loss below $112,000 and initial targets at $122,000 and $127,000. The risk-reward ratio on this setup is approximately 1 to 3, which meets my criteria for high probability trades. For Ethereum, the setup is even more compelling. Any pullback toward the 4,300 to 4,500 zone presents a high probability long opportunity, with stops below $4,200 and targets at $5,000 and $5,500. The institutional buying pressure we've seen in ETH ETFs suggests that any significant dips will be met with aggressive buying. But here's the key insight that separates successful traders from the rest. Position sizing and risk management are more important than being right about direction. In the current environment, I'm recommending smaller position sizes than usual due to increased volatility, but with the potential for larger moves due to institutional participation. The altcoin landscape is also presenting interesting opportunities. Cardano has been mentioned as a standout performer, holding firm while other altcoins have shown weakness. The speculation around a potential Cardano ETF is creating a narrative that could drive significant price appreciation if institutional interest continues to grow. Stellar Lumens is another altcoin worth watching, particularly as network growth metrics suggest increasing adoption. The key with altcoin trading in the current environment is to focus on projects with strong fundamentals and institutional interest rather than chasing momentum plays. Looking ahead to next week's key events, the release of FOMC meeting minutes will be crucial for both traditional and crypto markets. Any hints about the pace and magnitude of future rate cuts could trigger significant volatility across all risk assets. The crypto market has become increasingly correlated with traditional markets during periods of macroeconomic uncertainty, so monitoring these releases is essential for successful trading. The upcoming Ethereum NYC 2025 conference could also serve as a catalyst for further ETH strength. Major crypto conferences often coincide with positive price action as they generate media attention and showcase technological developments. The timing of this event, combined with the current institutional interest in Ethereum, could create a perfect storm for upward price momentum. From a longer-term perspective, the regulatory clarity we're seeing in the United States is creating a foundation for sustained institutional adoption. The end of the Fed's crypto supervision program removes a significant barrier that has been constraining bank participation in crypto markets. This regulatory shift, combined with the growing acceptance of crypto ETFs, is creating an environment where institutional adoption can accelerate rather than face constant regulatory headwinds. However, it's important to maintain perspective on the challenges that remain. The Basel Bank capital rules still create what many describe as a choke point for crypto adoption by traditional banks. These rules make holding cryptocurrencies too costly for banks due to capital reserve requirements, which continues to limit the sector's growth potential. Understanding these regulatory nuances is crucial for predicting the pace of institutional adoption. The custody infrastructure gap remains another significant challenge for mainstream crypto adoption. While we are seeing progress with bank-regulated digital asset infrastructure, the race to bridge crypto's institutional custody gap is still ongoing. This infrastructure development will be crucial for the next phase of institutional adoption. As we wrap up today's analysis, let me leave you with the key takeaways that should guide your decision-making over the coming week. First, the technical picture for both Bitcoin and Ethereum remains constructive despite short-term volatility. The institutional buying pressure we're seeing in ETFs provides a strong foundation for continued upward momentum. Second, the regulatory environment is becoming increasingly favorable for crypto adoption, with the Fed's policy shift representing a significant milestone. This regulatory clarity is likely to accelerate institutional adoption over the coming months. Third, the macroeconomic backdrop, particularly the expected Fed rate cuts, creates a favorable environment for risk assets like crypto. The correlation between traditional markets and crypto means that monitoring economic data releases is essential for successful trading. Finally, the shift in market dynamics, as evidenced by declining Bitcoin dominance and increasing Ethereum strength, suggests we may be entering a phase where altcoins outperform Bitcoin. This creates opportunities for traders willing to diversify beyond the largest crypto assets. For the next 24 hours specifically, I'll be watching the $117,000 level on Bitcoin and the $4,500 level on Ethereum as key support zones. Any breakdown below these levels could trigger deeper corrections, while bounces from these zones could signal continuation of the upward trend. Remember, successful crypto trading isn't about predicting the future with perfect accuracy. It's about managing risk while positioning yourself to benefit from high probability scenarios. The current environment presents both opportunities and risks, and the key is to remain flexible and responsive to changing market conditions. The institutional adoption story is still in its early chapters, and the regulatory clarity we're seeing suggests that the best is yet to come. Whether you're a long-term investor or a short-term trader, understanding these fundamental shifts will be crucial for navigating the crypto markets successfully. That's a wrap for today's deep dive into the crypto markets. If this analysis helped clarify the current market dynamics and provided valuable insights for your trading decisions, make sure to hit that like button and subscribe for more in-depth crypto analysis. The notification bell is your friend in these volatile markets, ensuring you never miss crucial updates that could impact your portfolio. Drop a comment below with your thoughts on the current market setup. Are you bullish on Ethereum's institutional surge, or do you think Bitcoin's dominance will reassert itself? Your insights and questions help shape future episodes, and I read every single comment. Until next time, keep your risk managed, your analysis sharp, and remember that in crypto markets, the only constant is change. Stay safe out there, and I'll see you in the next episode of Boni's Life, where we'll continue decoding the crypto markets together.